Absolutely. This is a big decision, and we've got the biggest voice in Indian banking, Mr. Rajnish Kumar, the Chairman and Managing Director of SBI, joining us live right here in Davos to talk about the government's big decision. It looks like it's a huge bonanza, sir. The government has decided to front load some part of the bank recapitalization, 80,000 crore worth of that, and about 8,800 crore comes for SBI. I want to first understand the big picture and the impact on SBI.
You see, if you look at the allocation, so banks have been categorized in two categories, PCA and non-PCA. The State Bank of India is non-PCA bank. It means that we are meeting all the international regulatory capital requirements, and whatever money, 8,800 crore, which is being made available to State Bank of India, as well as the amounts given to non-PCA banks, it is growth capital. And we will be able to position ourselves and lead the growth in the country. Non-PCA banks, it takes care of their international regulatory capital requirement. It is a very fine balancing act which has been done by the ministry, and it takes care of both growth capital as well as the risk capital adequately.
Absolutely. It's a good differentiation that the government has done between the prompt corrective action that has been taken by banks between those who haven't taken. In your case, this money will be used for lending, will be used for growth. What sort of a credit offtake do you expect from here? The government's own figures are that with this, there could be a credit offtake of over 5 lakh crore rupees. Is that too big a number?
No, it is not too big a number, and all of us know and we are aware that last year the credit growth has been muted, and particularly on the corporate side. So what this does is that for the supply side, it completely takes care of that requirement for the growth. And there is a big push on the demand side also, where government's infra spending has been increased. And as a result of that, private sector investment will also expected to follow. Some of the sectors are reviving, some of the sectors there is a big thrust, particularly like MSME now. That's it will be in focus. That is what the Honorable Finance Minister and the Secretary DFS has announced, that all banks, they will have to focus on MSME. The State Bank of India, we already have a very big plan for MSME sector. So capital will not be a constraint, and as the demand picks up in different sectors of the economy, we can see that 2018 is going to be a year of growth.
Absolutely, sir. I want to ask you a quick question before I go to anything else. The standard operating procedure norms that the government has put in place are obviously good governance structures. The norms for loans to consortium have been made fairly stricter. There has to be a 10% exposure so that smaller banks don't piggy ride on big banks like yourself. How do you see this change governance, and how do you see this change credit offtake? Because there are some who believe, could this make it more cumbersome to perhaps lend?
No, not cumbersome. It will make the life easy for the corporates also.
Okay.
Today, even for small things, when go to the GLF and the consortium, which consists of 25 banks, their life is very difficult. Even a small NOC, and they have to run around for 6 months. So it was again a very big reform which was needed, and limiting that minimum 10% share in the consortium is a very welcome step. It limits the size of the consortium maximum to 10. So decision making will be faster. The banks which will be participating in the consortium, they will have a good assessment of the risk, and whatever lending they do, it will be in relation to the risk appetite framework. That is another important announcement which Secretary DFS has made. So I think from the beginning, when the capitalization plan was announced in October 2007, the thinking in the government has been that
money can't just flow in.
You have to seek capital. The difference is, it is not that the government is giving capital. It is that banks
first clean up your house.
You should have a proper strategy. You have a stronger monitoring system. Whatever have been the learnings in the past about the large corporate credit, the greater discipline is required. So all that has been indicated here, and that is what I would say is a very balanced approach, where right type of reforms are envisaged in the banking system, and the capital requirement, as I mentioned earlier, both growth and risk capital, they have been taken care of.
So 250 crore worth of loans or over that will need special monitoring, and they will be red flagged the moment there is an issue. How does this help bankers like yourself?
That again, I think it was very much required, because around the multiple banking and consortium banking, we have seen that there was a lot of indiscipline, where the borrowing banks were different, and many times the accounts for cash flow, they were maintained with different banks. So lending banks lacked the control over cash flows. So this is one thing where there has to be a very tight control, and no cash flow should happen outside the banks which are the lenders. It is very, very important to control the cash flows, and the social monitoring and emphasis on properly implementing the covenants, don't allow the breach of covenants. So the tightening is very welcome, but it does not mean that in any way the intent is to inconvenience any of the borrowers. They also have to understand the new dynamics,
right,
and a greater discipline in the financial markets and the lending and borrowing markets is required. Banks are working towards it. Borrowers also have to adjust to this reality.
You mentioned that for the SBI there is already a great focus on MSMEs, but the government is now making it mandatory that the moment there is an MSME request for a loan, it has to be disbursed in the first 15 days. There is obviously an incentive for GST listed companies also. So what kind of a ripple effect do you believe this will have on the economy, job creation and economic activity?
So 15 days is for the decision
That's
making.
right. Yes, yes.
So I think that is a fairly good period for particularly for the templated loans, where you already have the template for sanction of the loans, and it is more of a tick box exercise. As the credit size increases, you may take more time, but let me tell you that in the State Bank of India, after we implemented the new processes and the lending methods have been changed based on the cash flow,
right.
we have brought down our turnaround time for SME loans from 64 days to average 21 days. So it is feasible.
Yes.
We are very much close to that, and it is feasible. As I said, that if the loan is smaller, then they can be through the credit risk rating model can be very well implemented, and a tick box approach can be adopted. For larger credit, yes, individual judgment is required, so you may need a little bit more time. But what the GST and the cash flow, if you control the cash flow and have a good idea about the cash flow, then based on that, lenders will find it very easy to take the lending decisions, and it brings again a new discipline even on SME.
So while it's very good for bankers like yourself, because it's also now talking about an ease index survey, it will be done by an independent agency. I'm sure SBI will come out with flying colors, but there are banks out there who need this capital not for growth, not for credit offtake, but to meet those capitalization norms. Do you see this trigger M&A in this sector? I mean, you know, banking consolidation has been talked about a lot. Do you believe this will facilitate it even more?
No, it will definitely facilitate. It is a question of timing, but first is that differentiation, cleanup of the balance sheet, and putting the house in order, and after that consolidation can be thought of. I will not rule it out, but timing is always an issue. But the beginning has been made particularly about the cleanup of the public sector banks, and I am very happy about one thing, that government has again imposed or reiterated their faith in the public sector banking, which otherwise is doing a yeoman service in the country in terms of reaching out to the underprivileged, financial inclusion, social inclusion. Their public sector banks, their role has been phenomenal. If we look at the PMJDB account, out of 300 million account, 90% accounts are with the public sector banks. So their role in furthering the social inclusion and financial inclusion agenda, recognizing that and addressing the issues around corporate lending. So public sector banks will be playing a much more bigger role in the economy, and
like you have played perhaps in the past as well, but I think the first differentiation that you made, that it will incentivize banks to perform better, clean their own houses. I will take a quick question because I think there's some more details that are coming on the recap bonds. This will have a maturity of 10 to 15 years. Bonds will not be SLR bonds. They will be priced in 3-month average plus spread. Will be a cash neutral in nature. Any quick thoughts on that?
So that is all right. That's what we were expecting also.
Yes.
So, I think that is in line with what was being discussed.
One of the things that has been decided, and obviously this is perhaps to incentivize digital transactions, that there will be zero liability on fraudulent digital transaction and money will be refunded in 10 days. Does that put the onus on the banks to make it even, to ring fence it even more than it has been in the past?
We have to take adequate steps and measures, but it is again a very welcome step from the customer's point of view, and in many countries this is already there, where first you restore the money to the customer and later on investigate, and if there is a fault, at the end of the customer, then you recover. So I think it is a very welcome
So we're
step.
perhaps moving to global standards.
Global standards as far as the customer service is
Absolutely. A
concerned.
quick last question to you, sir. I think one of the things that the finance minister did say was that they will look at monetizing non-core assets of PSU banks, and there will be rationalization of some banks and branches overseas. Obviously, SBI is the giant lender, and I'm presuming that none of this will pertain to you. But does this also mean that a lot of these overseas branches, for at least smaller banks that don't really do business, will perhaps be done away with? And at your level, are you looking at monetizing non-core assets just yet?
Yes, that is a constant process, and depending upon the need, as well as for some banks, what is a non-core asset may not be a non-core asset. For me. That differentiation also we have to make. Say for example, in a business like SBI Life. So for some banks, probably there may be a time that they exit that business.
That's right.
But SBI, we are very well entrenched there. But there are many investments which are smaller, and a lot of investment we make sometimes to promote a particular, say for example, your civil or your clearing corporation. So there are many such investments which State Bank has made from time to time, and we will exit those investments at appropriate time.
So just a quick last question before I let you go. Obviously, the government has not just reimposed its faith in PSU banks. It's also told PSU banks that you will have to seek capital. It will not flow to you.
Yes, yes.
Does that lead to credit discipline, not just for the borrowers, but the lenders as well? I mean,
yeah. That is what I'm saying. That we have all learned a hard way, and there is a need for course correction. We need to strengthen. All banks need to strengthen the credit risk management practices. All banks need to have a proper risk appetite framework before they lend the money, and particularly on the large corporate side. So any lending decision should be in line with the risk appetite of each of the banks. Risk appetite of a smaller bank is not the same as that of a larger bank. So that differentiation has to happen, and that's why this limit of 10% participation in the consortium lending, it flows from that.
And obviously they can't piggy right away. If I can take two quick questions away from recapitalization, it also has to be on resolution. And I know bankers are putting their might behind resolving, especially after the new IBC norms. When will we see the first resolution happen? Because a lot of people believe that the proof of the pudding is in eating, and only when a resolution happens will we know the success of IBC.
So some of the cases we already have resolution plans in hand. Some have even been approved. And the first list of 12 accounts which was referred in July and August.
Right.
So there the resolution plans will all be finalized by February.
And are you seeing activities by corporates who've obviously been blocked for now outside of, are they negotiating outside the table? Are they trying to put money on the table that they were not putting in because, till now they were all allowed? Now that you have barred corporates who owe money to banks, are you seeing negotiations happen outside?
No, I'm not very clear about your question.
All I'm saying is that, corporates now corporates are barred. A promoter who who owes money to the bank has now been barred. So there is incentive for them to put money on the table.
Right.
Are you seeing activity there?
So it is up to individual promoter, because they have to clear the overdues, particularly the interest payment as per the law. So I have not seen anybody so far who has come forward and said, here is your clearing the overdues and allow me to participate. I have not seen as of now. Also, as far as the resolution of debt asset is concerned, so whatever means are available at the disposal of the lenders. NCLT is one process, but there are other means. So case to case basis, all options are examined. And in the given circumstances of the case, whatever is the best option, that is what the lenders adopt.
So a quick last question on capital.